This is not financial advice. I'm recording my thoughts about Fortinet, which is an end-to-end cybersecurity solutions company that is already profitable. In the cybersecurity space, I already own CrowdStrike at a cost basis of about $122 and SentinelOne at a cost basis under $14. And I'm looking to buy a large cap cybersecurity company to add to my portfolio. Fortinet seems to fit that description. Fortinet's stock is currently trading at about $68 with a market cap of about $53 billion. In the past 12 months, they made about $4.7 billion of revenue, which puts the price to sales at about 12. This is definitely expensive, but it's not as expensive as the likes of CrowdStrike. As you can see, they made about $1 billion of net income in the past 12 months, putting their PE at about 56. Most of the companies in the cybersecurity space do not make a profit yet, and I have Fortinet, which already makes a profit, so that's definitely a plus. Fortinet has custom chips and they have their own OS, which is operating system, and having their own hardware and software gives them an edge with respect to cost, but at the same time, it also has its limitations because a lot of hackers find this FortiOS as a target and launch attacks, and Fortinet has to constantly work on fixing these vulnerabilities, so there is a trade-off. Let's quickly look at the financials and then move on to the valuation. In the most recent quarter, they grew their revenue by about 32% and made about $1.26 billion of revenue. Fortinet is not a small company. It already has a revenue of about $4.5 billion. So growing at 32% year over year at this size is very impressive. Current GAAP operating margin is at about 22%. For the fiscal year of 2023, they are guiding for 24% year on year growth to put their revenue between $5.425 billion to about $5.485 billion. It is still impressive for a large company. Since Fortinet is already profitable, remember that they made close to $1 billion of GAAP net income in the past 12 months. They're doing a share repurchase program. As you can see on the screen, they have about $1.53 billion readily available to repurchase the stock. At current valuation of $54 billion, that is enough to buy almost 2.8% of the total float. Let's now move on to Fortinet's valuation. As usual, I'll show two cases, one with reasonable assumptions and the other case with great execution. In the reasonable assumptions case, I'm assuming that they can hit the current year's guidance and make $5.49 billion of revenue in 2023. I'm assuming 20% growth rate in the next 4 years. This year, they're already guiding for 24%, and cybersecurity is the sector to watch for this decade, and there are a lot of tailwinds for cybersecurity sector. So I think 20% growth rate is achievable for Fortinet, and I think it's reasonable. With that, they can make about $11.37 billion of revenue in 2027. Gross margins for this company are north of 75%, so I can easily assume a net profit margin of 25%. At the moment, the net profit margin is about 20%, but as they scale, they should be able to achieve 25% net profit margins. With that, they can make about $2.84 billion of net income in 2027. For a company with growth rate in the 20% range and has a net profit margin of 25, I can assume a multiple of 22.5. Since this company is already a leader in the cybersecurity space, I can pay a premium and assign a 27.5 multiple, with which this company would be worth about $78 billion in 2027. Currently, they have about 785 million outstanding shares, and I'm assuming 1.5% buyback in the next 4 years. With that, they will have about 728 million outstanding shares in 2027. Fortinet already generates close to $1 billion of net income, so they should be able to do a buyback of 1.5% year over year, unless they have an opportunity to acquire another company and grow the revenue as well as profit. I'm assuming they would do buyback. When I divide $78 billion of market cap with 728 million outstanding shares, I get a share price of about $107 in 2027. Currently, they're at $68, right? So that's about 58% gain in the next 5 years, which is going to beat the index. Let's move on to the great execution case. I'm assuming 25% revenue growth rate, and I'm keeping the net profit margin and the multiple same. With that, they will have about $126 stock price in 2027. Currently, they are at $68, so that represents about 86% gain in 5 years, which is attractive. In conclusion, Fortinet is a cybersecurity leader that is already profitable, and I'm seeing a gain of 58% in the next 5 years in the reasonable assumptions case and 86% gain in the next 5 years in the great execution case. So I'm definitely a buyer of Fortinet at $69. I don't like the price because we're at a price to sales of 12. I prefer price to sales below 10. So when I put the price to sales of about 10 for this stock, that would get me about $56 stock price. So $56 is when I will buy a significant position. But at close to $68, I can only buy a little bit and wait for a pullback. Let me know your thoughts in the comments. Thank you so much for watching.